Splashed all over the news right now is the new Bitcoin ETF. It's finally been approved by US SEC, correct? Now, I've actually done many hours of research to condense this into a quick sharing with you. So, as always, do smash the like button early because you know I have the goods. And share this with someone who has this curious question. Is it time to buy the Bitcoin ETF or not? Now, nothing I say here should be a buy or sell recommendation. Do take note of that. And with that addressed, let's run on to key important details you need to know. The first is this different than buying Bitcoin outright or not? Now, Spot Bitcoin ETF will allow investors to gain exposure to the price of Bitcoin without complications and risks of owning a Bitcoin directly. This includes setting up crypto wallets and accounts with crypto exchanges, which have, of course, some bad records. Now, I do have some experience buying and selling on crypto exchanges. They are very cost inefficient, very expensive. They have all sorts of extra charges moving monies in and out, and sometimes their deposit methods are so unregulated and very scary to put big amounts of money. For myself, I'm much more comfortable with a Bitcoin ETF than buying Bitcoin itself moving forward. And as we know, the industry has experienced all sorts of scandals like the FTX exchange collapse, like Hodlnaut. I have my own fair share of bad experiences there also. And for more experienced crypto people, I'm sure they have all had their stories of being scammed of crypto assets, because in that space, it's just a cowboy's town. So many potholes to make mistakes, and the story can go on and on. But long story short, if you are just simply looking to diversify and own crypto assets, Bitcoin ETF is by far and large a much better approach of getting exposure. This also brings about another point. For ETFs, it could eventually become retail approved. As of now, I'm also not too clear on regulations. But if they are retail approved, you can see very easily in future, not only institutional investors, retail investors can create robo-portfolios that have certain allocations to crypto assets via a Bitcoin ETF, for example. That has already happened with a gold ETF in certain robo-portfolios. Next, why is this different to Bitcoin futures ETF? Now, the SEC has actually approved in 2021 Bitcoin futures ETF. But these products don't track prices precisely and have a lot of costs when futures contracts roll over. Let me show you the chart to prove that. And this is actually by ProShares Bitcoin Strategy ETF, which is the dark blue line at the bottom. You would realize that the discrepancy in performance is huge, simply because futures contracts expire, and when markets go up, they need to sell and buy a higher one, which causes inefficiency in performance. So with a spot ETF now, I'm not too sure if anybody's interested in a futures ETF. Next, are there already spot Bitcoin ETFs in Canada and Europe? Yes, but US is the largest capital market in the world. Let me show you the Purpose Bitcoin ETF, which was the world's first spot ETF. You would realize, unlike a futures ETF, it tracks the exact Bitcoin price trend very accurately. Of course, at certain periods, there's some premium and discount, just like when you see gold price and gold spot ETF. And this ETF actually got considerable hype when it was launched in February 2021. But it was launched in Canada, which is a much smaller market than US. And it was launched at a time where Bitcoin was almost at its peak. This is an important part to note, because this gives you clues whether some stories of pent-up demand for Bitcoin is exactly true or not. This ETF attracted $421 million in the first 2 days of trading, but didn't make to $1 billion until 2 months later, as you can see in the chart over here. I brought this up because there are a lot of wow stories saying that the Bitcoin ETF will attract how many trillions of capital going in. They are likely over bullish. This chart shows you that when markets go up, there is demand. When market comes down, that demand evaporates. Most people are not blockchain diehard people. Most people are speculators, and most people are asset allocators for the long term. So just in case you are in either of these two categories, let me show you what you're going to see on the exchange upcoming in this few days. Depending on when you view this, some information may be outdated already. I'm filming this as of 11 January 2024. So again, smash the thumbs up because I've cut the hours to prepare this quickly to share with you. This is the list of the new spot Bitcoin ETFs coming up. The asset managers are Bitwise, ARK Invest, Invesco, iShares, which is actually BlackRock, Van Eck, Franklin, Fidelity, WisdomTree, Valkyrie, and Hashdex. You would see that this summary table shows you the ETF expense ratio. And what do you see that's interesting? 0.0%, correct? In fact, 6 out of 10 of them are giving free and not making any money, at least for the first few months. I'm saying 6 out of 10 because Grayscale Bitcoin Trust, GBTC, has been around for a long time. They are a trust, not really an ETF. And right now at 1.5% expense ratio, I guess nobody's really buying into it moving forward. But the point is this, 0.0%, no charges, no earnings for these fund managers, correct? What does that tell you? The competition is crazy. As a fund manager, you have to store Bitcoin, you have to do administrative fund flow, create and sell securities to match the holdings of Bitcoin and demand, and all that will be upfront cost to you and you can't earn anything, at least for the first few months for some of them. But subsequently, you're hoping to earn that 0.2 to 0.3% in terms of fees. So as a fund manager, if you can collect 5 billion of assets at 0.3%, that means $15 million of fees. Now, that's not too bad already, right? You can open a few offices and hire some staff to run this financial product and you can make some money. And just in case you think $5 billion is a lot, BlackRock is right now running a promotion. For its first $5 billion of clients, they'll get a promotion 0.12% of expense ratio, which will step up to 0.25% after 12 months. That is hinting to you 5 billion is chicken feed to them. They are targeting way bigger amounts. I brought BlackRock up for discussion because, in my opinion, creating an ETF is a commodity. There's no special skill to it. It's just create a product, hope people buy, and it's a winner-takes-all game. BlackRock, in my opinion, is clearly one of the front runners, and they have the financial muscle to sustain and outlast some of the competition listed over there. Now the question is, how many gold ETFs do you know? For myself, I only know SPDR. There aren't that many, correct? How many S&P 500 ETFs are there? There are a few, and you've probably heard of them, but you haven't heard of 11 S&P 500 ETFs or so. So again, the hype is real, the competition is real. This leads to the next question. Josh, if I really want to buy as a friend, can you tell me which one to choose or not? I have in mind what I like, but whatever I mentioned upcoming next is not a buy or sell recommendation again. So with that established, my personal preference is of course either the BlackRock one, which is iShares Bitcoin Trust, IBIT, or the Fidelity Wise Origin Bitcoin Trust, FBTC. The reason is quite simple. These two are huge asset managers. FBTC, for example, they are likely going to be able to weather the storm better than the rest. FBTC, in fact, is going at 0% all the way until 31st July 2024. Then it charges 0.25. So it's even cheaper than the one by BlackRock, which is IBIT. When they first created this product, they were targeting 0.39%, as you can see over here. But because of competition, they've reduced it to 0.25, which tells me one thing. They are very keen to gain a leadership in this space. And that's why I also believe they are one of the better ones to pick from this list over here. After the entire Bitcoin ETF hype is done, there's actually another hype that's upcoming. And since we're on this topic, maybe I can share with you. And that is the speculation of the new ETF for Ethereum. BlackRock has also fought for Ethereum spot ETF. Right now, if you were to see the chart for Bitcoin versus Ethereum, you will realize that Ethereum has been losing to Bitcoin simply because of this Bitcoin spot ETF hype. Now that the hype is confirmed already, everybody seems to be rushing towards Ethereum. And that is why towards the end of this graph, you see a sharp spike signifying Ethereum's outperformance against Bitcoin. This is likely going to capture the imagination of speculators in the months ahead, and you lead me to today's conclusions. The first is whether you are an investor doing asset allocation or trading, do be careful at this period. Don't give in too much to fear of missing out FOMO. The demand, as I've proven already, no one knows for sure. And each media expert have their own biases. Right now, quite obviously, the bulls are louder. The second is that the list of Bitcoin ETFs will likely shrink in the years ahead. This could be a winner takes all, and from that list, hopefully I've suggested some bluer chip names for you to consider if you're keen in this space. Again, this is not a buy or sell recommendation. Hopefully I made it clear. I'd like to invite you to leave your thoughts in the comment sections below and also answer this question. Do you imagine your portfolio to have a crypto allocation in the future? I'll be keen to hear from you, and I'll sign off from today's video. Take care as always. Goodbye.